Alright guys, welcome back to the channel. Just going to do a quick account update. So this morning I ended up getting into SQ. I bought a call debit spread for I had $181 left in buying power. So I put a limit order for 180 because it was hovering around 190. On this first 5-minute candle dip, 935, I got filled at 180. And I planned on holding this thing until expiration because here's the daily chart. This is the reversal right here of this downtrend. So around 213 I figured was support. So I had bought I'll show you exactly what I bought. I bought a call debit spread at 935. It was a 210 by 212.50 contract. So the price had to stay above 212.50 by the end of Thursday because it's a short week, and I would have made, so the difference between this spread is $2.50. So I would have made that's $250 minus what I paid, $180. So I would have made $70 max profit off this. It seemed like a good trade, and I was planning on holding it, but I ended up selling it. I put a limit order to sell at 210 at 10:07 on the push up, and I got filled. So I made $30 off this trade in just about a half hour. Here's the fill. So here's the call debit spread. 3 hours ago I bought it. Like I said, at 9:34 I got filled for $180. I sold it for $210 at 10:07. So I bought it on this 5-minute candle and I sold it right here. I could have, more than likely I could hold this thing till tomorrow, as long as there's not a big gap down tomorrow morning. And I could probably get out of this thing at full profit expiration. It's at 217. You're talking $5. But I just wanted to make the quick, so I made the $30 off that, and I'm still holding. I'm gonna let this Amazon debit spread expire tomorrow because there is no way that this thing's not gonna, it's very unlikely that this thing is gonna expire worthless. The minimum I need for max profit on this is $3,120 for Amazon. Right now it's at $3,310. So if we do the math, 3,310 minus 3,120, so $190 move down between today and tomorrow. The probability is very low for that to happen. I mean, never say never. Anything could happen, right? But the odds are in my favor on this trade, and they've been in my favor since I opened it. Let's go to the chart. Amazon, we'll just look at the daily. So I don't care about the 5-minute on this. So like I said, I bought this down here around 3,200, I think. So it was still weighing the money even when I bought them. We had this big run up on Monday, another green day yesterday, and now we're pulling back, but we're staying above 3,300. That's kind of that support line. So I have the rest of the day and tomorrow for it to drop all the way down here. You would need such a big sell-off. It's not going to happen. So this should definitely expire max profit. So I should be good. I should make probably $500 this week between this and that SQ trade I just made today. I'm not making any more trades. I have an order placed to sell this at $4.99. The max is $5. So I'll get out early if it will sell at $4.99, but you can see the bid-ask spread is so big on this. I mean, I'm trying to get $4.99. It's between $3.30 and $6.70, so I'm trying to get right in the middle. I have 6 contracts, and I'll take it early, and I'll lose the dollar or whatever. Yeah, it'd be 1 cent, so it'd be $6. I'll pay $6 to close it early, but I don't think I'm going to get filled. Even if I put it at $4.95, I probably still wouldn't get filled. But I'm just going to let this thing expire. It's not a big deal. And that's it for the update for today. Probably Friday, I'll make a final update video for the week, and then show my profits for the week, and then my profits for the last 3 weeks, ever since I've been starting spreads. And it should be pretty good. So if you guys want to know how I did that spread this morning, really quick, because I know I haven't really, I think I've explained it, but so I bought the 210, so here's the price right here, 217. It was right above 215 when I bought this. So you can see how much it is now. So what you do is you buy the cheaper call, right? And then you're going to sell the more expensive call. And if they both expire in the money, then you keep the difference. So here's the price right now, $2.25. I sold it for $2.10. So as of right now, I probably could have gotten another $15, $30, so $45. But I'm happy with the $30. It's fine. Can't be too greedy, right? So that's it. That's a call debit spread. Click continue. Put how many you want, and then say I didn't want to pay $2.23. Say I wanted to pay $2.10 max. I would just hit the review and then submit. Buy to open, sell to open. Tells you what kind of spread it is up here. And if it does come down and hits the 210, fills you, then you'll eventually see it up on your portfolio. I'm going to cancel out of this. And it's that simple. I like to pick a price for these call debit spreads, especially if I'm buying the beginning of the week, where I don't think that if the price starts to drop, that's going to get that low. That's how much in the money I like to go. So I'm basically, instead of buying, like when you buy a stock, you're just hoping it goes up from the point you bought it at. With the strategy that I'm doing, the price could stay the same, it could go up, or it could go down to a certain extent, and I could still make max profit. The profits are capped, but for me, doing these high probability trades is way less riskier than buying a straight call and letting Theta and IV Crush just kill it. Well, that's going to be it for today. The account will be at an all-time high. Should be by the end of the week. So I'll give a full update on that. And Happy New Year to everyone.